everyone, and welcome to my 2025 Nigeria Economic Outlook. So I never used to do this before. This is my first Nigeria-specific economic outlook. So if you look through my YouTube, I only have global economic outlooks. But I looked through the comments last year and everybody was like, please, can you do a Nigeria-specific economic outlook? Because we're not interested in what's happening in the rest of the world. We're interested in what's happening in Nigeria. And obviously, I couldn't really incorporate a large Nigeria section into my global economic outlook because, I wanted to concentrate on things going around the world and how they affect Nigeria as opposed to something specific to Nigeria. So I've done this video specifically for Nigeria. I'm going to start with an introduction and a bit about me, and then look at the economic landscape of Nigeria, the economy's bright spots, my outlook recommendations for government and the private sector, and then conclude. It's going to be a much shorter video than my sort of global economic outlook. So who am I? I'm a two-time fund manager. My first fund did a 5x DPI, which meant that I was able to return 5 times the money that investors gave me into my first fund. Currently raising my second fund, HealthCap Africa, which is an early-stage fund that focuses on tech businesses in the fintech and health tech sectors in Nigeria, Kenya, Egypt, and South Africa. In my academic background, I have an atypical background for somebody in finance. I'm a medical physician by training, master's in finance and economics from the University of London, where I focused on microeconomics, macroeconomics, financial markets, capital markets, banking, bank regulation, and the IMF and economic policy. And I'm currently finishing my PhD in finance, focusing on digital currencies and monetary policy transmission. I've written 5 books. I've produced a lot of market reports, including healthcare financing in Africa and the health tech unicorn report. And I have a YouTube channel where I teach finance and economics. So on the finance, I have banking, capital markets, a bit about venture capital, project finance, etc. And also economics, focusing on development economics, microeconomics, and macroeconomics, as well as the role of the Bretton Woods institutions like the World Bank and the IMF. So introduction. So I really believe that Nigeria is on the path of transformation, leveraging its youthful population and strategic reforms to drive growth. Key tech sectors like technology are growing. We're seeing, we saw in 2024 a big, the largest industrial project, $19 billion project, Dangote Refinery, come on stream. There's been efforts to diversify from oil dependency. And I'll speak more about my perspectives on oil dependency in the next few slides. And really, this presentation is exploring the trends and opportunity that are shaping Nigeria's economic future. So what's the current landscape of Nigeria? Nigeria's GDP grew by 3.6% in Q3 2024. Obviously, as an emerging market or a frontier market, we need faster growth, but it's growth nonetheless. So that's sort of the last set of GDP figures that we had from 2024. In terms of structural reforms and fiscal policies, there were 3 main things that happened last year. There was a subsidy removal, which was really impactful. We were spending more money than we spend on healthcare and education on fuel subsidies, making cheap fuel. Fuel, PMS petrol, was cheaper than bottled water. I can remember I work on the mainland, so my office is in a place called Ikeja, and I live in Ikoyi, and there's a really long bridge separating both places. And when I forgot my laptop at home, or when I forgot my lunch at home, I used to ask my driver to drive all the way back to Ikoyi to get my lunch and then bring it back to Ikeja because it was cheaper than buying lunch. That was like how cheap fuel was in Nigeria. So the removal of fuel subsidies will save the government about 1.4 trillion naira at least. That's about $1 billion. And that will really allow the government a bit more fiscal space to repay its debt and invest in infrastructure and social programs. The second was a set of tax reforms, really ambitious tax reforms, with the aim of raising non-oil revenue by 30%. Nigeria has one of the lowest debt to GDP ratios, tax to GDP ratios in the world. I can remember at one point, Afghanistan, when it had just come out of the war, had a tax to GDP ratio of 9. I don't think Nigeria has gotten up to 9 yet. And even if we have, it's just in that range. And, we're not at war. So, the Nigerian government, in terms of the government take or government financing, really relies, you know, overly on the revenue from the oil industry, which is unsustainable in the long term. The third major set of reforms was the foreign exchange reforms. We sort of liberalized the foreign exchange regime. Before, we were really trying to peg it to a certain figure. We liberalized that and lifted bans on the 43 items that were previously blocked from accessing the foreign exchange market. And that's really provided transparency to the market, which I'll speak about a bit more later. But yeah, the three sets of reforms that we've had are the subsidy removal, tax reforms, and foreign exchange reforms. Now, I'm saying that they're good things in theory, but in practice, 2024 was a really, really difficult year for Nigerians. So you can imagine fuel subsidies being removed. That means the cost of transportation went up. That means the cost of food went up. And then Nigeria still imports a lot of raw materials. So we had a really rapid devaluation in our currency when sort of the peg was lifted and we liberalized the exchange rate. And that has been really, really difficult for Nigerians, particularly the poorest in our society, seeing the food prices go up, seeing difficulty transporting themselves from work, difficulty transporting their goods from the farms. So even though the reforms in theory has been good, practically, it's been devastating for a lot of Nigerians who were already living in poverty. We already had the highest number of people living in poverty in the world. And this has just like really added to our misery index. So of course, these reforms have been recommended by the World Bank. They've been recommended by the IMF. Everybody knew that it was a sensible thing to do. But it hasn't, it hasn't been an easy year for Nigerians because of these reforms. I spoke about exchange rate and devaluation, and the most significant devaluation occurred in June 2023, actually, but it has continued to drop from there. So we've really seen sort of a 23% drop, actually, in the Naira's value against the dollar at that point. So that was like the biggest single drop. And since then, the value has actually, of the dollar, the Naira against the dollar has continued to drop. But one bright spot in this was the recent implementation of the electronic foreign exchange matching system, which is a matching marketplace for the foreign exchange operatives or the people that sell dollars into the market. And this has brought a lot of transparency into the market because it has allowed, I think in previous years, the price of the dollar has been sort of shrouded in secrecy, and people are getting different rates at different times for different sets of people. And the electronic foreign exchange matching system implemented by the central bank has really brought, more transparency into the system, and actually has caused the Naira to appreciate slightly in the past few weeks. External reserves have also risen from about 38 billion in September to over 40 billion today in December. And that's a great thing because it makes foreign investors more confident about our ability to pay our bills. So what are the key drivers shaping Nigeria's economy, or what key drivers will shape Nigeria's economy in 2025? You can't separate the Nigerian economy from the price of oil. The price of oil is, probably the most influential single factor on Nigeria's economy today. 90% of all our foreign exchange earnings come from oil. And there's a lot of things that we don't control. We don't control the influence of fracking and whether the US will be able to eke out, the US is currently producing about 13 million barrels per day, whether they'll be able to eke out a few more million barrels per day with sort of more efficiency in fracking, more licenses for fracking. Zelensky and the Ukraine conflict has really sort of reduce the availability of Russian oil and gas, whether that is going to come back on stream and whether that's going to have effects on supply. And then tensions in the Middle East as well, whether we're going to have supply disruptions there. And these are the kind of factors, amongst others, that will determine sort of the price of oil this year. And unfortunately, kind of really continue to significantly influence Nigeria's destiny. Like I said, it's an economy of 220 million people that really depend on the dynamics of a commodity that we have very, very little control over its price. And in terms of the grand scheme of oil producers, where we have Saudi Arabia on 12 to 13 million barrels, we have America on 30 million barrels a day, Nigeria probably kind of hovers between 1.2, sometimes it goes a bit down, but between 1.2 to 1.4 per day. We're not even significant players in the global oil industry, but like it kind of determines our destiny. So again, in 2025, we'll be watching the oil price very closely. I don't think it's going to significantly rise or fall based on my analysis, but this is one of the key levers of the Nigerian economy and will continue to be for the foreseeable future. Dangote Refinery. This project has lived rent-free in the heads of Nigerians for the whole of 2024. It's probably the most talked about topic on TV. It's one of the largest industrial projects that we've had in Nigeria. It's a $19 billion project, which takes us away from the old era in Nigeria where we were producing crude but we weren't able to refine it. So we were producing crude and exporting it, and then we were buying back refined products on the other hand. And combined with the fact that the refined product was subsidized by the money that we earned from the crude, we're really in a lose-lose situation in a way. And I spoke about the PMS subsidy earlier. And what do I think that the Dangote Refinery, in terms of advantages, is giving us? Well, we have to sell our crude in Naira to Dangote for the refinery and the economics to work, which means that we're losing some foreign exchange revenue. But at the same time, I really do think that in terms of energy independence, we're no longer relying on other countries for refined products, which is a good thing. I think, there's about 80 products that you can get from a barrel of crude, apparently. I didn't know this, I just looked it up, over 80 products. So it's going to generate revenue for us. This stat is actually from Dangote Company. His firm estimates that we can generate about $4 billion eventually from the products that come out of his refinery in export revenue. Now, bearing in mind that that's about what we make from crude, it's extremely significant to the economy in terms of export revenue. And I'll be explaining why exports are so important in the next slides. Job creation, of course, is important. And then fiscal policy and sustainability, right? We're spending all that money on subsidizing petrol, which is no longer going to be spent. And I think there's a sort of microeconomic behavioral play as well, in that we typically, as Nigerian entrepreneurs, there are very few large industrial projects in Nigeria. And I think that Dangote has demonstrated it's been really difficult for him. He has a lot more gray hair since I saw him before the refinery, but he has demonstrated what's possible. I mean, this is the largest single train refinery in the entire world, and it's in Nigeria. And I think that that's going to inspire a whole generation of new millionaires, new entrepreneurs that want to come into the market and really begin to dream big, that probably may not have without this project. So I think, it has a lot of advantages, and it's one of the levers. We'll be all looking at how this project evolves and how the government helps him to execute to see, it's still going to be one of the key levers for our economy in 2025. And I don't think there's a single economic report, be it the IMF Article 4, be it, macroeconomic reports from local firms or international firms, that doesn't mention the refinery project, just because it has it's so influential, and like I said, it's lived rent free in the minds of every Nigerian throughout 2024, and will probably continue to do way into 2025. Another thing to consider is the balance between structuralism and monetarism. These are both economic terms. Monetarism is really the belief that you combat inflation by raising interest rates. And that's really what Nigeria has been sort of doing, I would say, in the past. We've been, every time we see inflation, we raise interest rates. And of course, that really strangulates growth because people can't borrow money for their businesses and they can't employ people. And it becomes a sort of vicious cycle. And what we're beginning to see now is a lot more structural policy being implemented. And structural policy really comes out of Brazil and the South American countries that have a lot of experience with high inflation. And they believe that inflation is an inevitable kind of consequence of growth. And that countries that are developing should worry less about inflation and less use a lighter hand with regard to monetary policy and really focus on fixing structural factors, fixing things like infrastructure, pursuing things like import substitution. And over time, these more structural policies will bring down inflation more effectively than monetary policy alone. So the interplay between structuralism and monetarism is a key factor that we'll be watching in 2025. Nigeria is also the biggest tech ecosystem in Africa, and the technology sector contributes, by some estimations, up to 20% to GDP, nearly 20% to GDP anyway. As the biggest tech market in Africa, we'll be looking at technology to really help us drive growth. I think innovation has always driven growth. It's just about the type of innovation. We had a new unicorn, Nigerian unicorn, born this year. Moneypoint just closed its $110 million financing from Google, as well as DPI and Verod. And it's a fintech that caters to small, medium-sized businesses in Nigeria. 1 in every 5 unicorns in the world is a fintech. So we're on trend. And I do believe that we have a comparative and competitive advantage that we really need to double down on in the financial services and fintech space. Why I think technology is so important is if you think back and look at the history, before the 1970s, the United States innovation levels were kind of on par with those of developed countries. So like it was about the same as Japan and Canada and Europe. However, the emergence of US venture capital and the venture capital industry really sparked an exponential increase in innovation, really solidifying America's position as the global technology leader. Today, 3 out of every 4 large new companies in the US are backed by venture capital. And studies have shown that venture capital is 3 to 4 times more effective than corporate R&D at driving new innovations. Now, despite representing 0.2% of all firms, VC-backed companies contribute nearly 50% of entrepreneurial IPOs. That is influence. That is economic growth. And even if you look at the public markets in the US today, the Magnificent Seven are all venture-backed companies that represent over 50% of total stock market capitalization. Venture capital is important for Nigeria. Venture capital is important for the world. And I'm really excited about the contribution of venture capital and technology and innovation to really lift people out of poverty and create jobs across Africa. Another factor that is inescapable is the US dollar. And we all measure our performance in emerging markets and the rest of the world against the US dollar. It is the reserve currency of the world. It was chosen as a reserve currency, I think, at the end of World War II, where there was a meeting of different countries, and America said, make our currency the reserve currency. And then we all just took it like that and started doing that. And because that's the way the world works, we have to generate dollars if we don't want our currency to devalue. And a lot of Nigerians feel like it's the role of the central bank to generate the dollars. That's not entirely true. It's not a dollar factory. It's not somewhere where dollars come out of. It's not a place that makes dollars. They can only sort of manage the exchange rates. But what actually makes dollars are entrepreneurs and businesses that generate value, exportable value. And that's why the oil and gas industry has become so essential to Nigeria, and why we're trying to make sure that we support the entrepreneurs and businesses to be able to generate dollars from other places aside from the oil and gas industry, so we can sort of keep our currency stable and keep our economy healthy. There's also export-focused manufacturing. I think that's a big part of the story as well. 2 out of the 3 dollar billionaires in Nigeria are manufacturers. So it shows that the sector has potential, and it's something that the government really needs to think about policy to streamline policy around manufacturing and make the business environment conducive for manufacturing. But I also think that there's some geopolitical factors that we don't control that actually make it the right time for Nigeria to start thinking about manufacturing more aggressively as well. So what's my 2025 outlook for Nigeria? I think the tech sector is going to continue to boom. I really am excited. Like I said, almost 20% contribution to real GDP growth. So I'm excited about that. I'm excited about the GDP growth, modest, but it shows a gradual recovery from the previous economic challenges. Nigeria is expected to grow around 3.2 to 3.4 in 2025. And we think that the inflation rate, if we continue sort of implementing the reforms and the government is able to manage price levels, the inflation rate will stabilize around 25%. That sounds massive to anybody that isn't from an emerging market, but it's better than where we're coming from. I think we're going to continue to drill. So Equinor, Renaissance, Seplat, Oando have all been signed. Seplat's acquisition of ExxonMobil's business was a big deal to be signed. So we're going to continue to work on production as well and invest in production. And like I said, the Nigerian economy is inextricably linked to the oil sector. So yeah, drill baby drill in 2025. Like I said, inflation has declined, and we're hoping that inflation stabilizes in 2024 around 25%, narrowing the gap between inflation and investment return signals and improving economic environment both for businesses and the consumer. And this is what I was talking about. The impact of tariffs on China could be an opportunity for Nigeria. So the fact that the US has overtly said that they want to stop buying goods from China means that they have to diversify their sources of imported goods. And I think that now could be an ideal opportunity to begin trade negotiations with initiatives like Prosper Africa to see if, we could begin to start to fill that gap. Obviously, China is, I think 20% of global manufacturing takes place in China. So it's going to be difficult for us to fill the entire gap, but at least start to have those early conversations about how Nigeria or the broader Africa continental free trade zone, because Africa also is home to the largest free trade zone in the world, the African continental free trade zone, could really meet some of American demand, both for food and for manufactured goods. In terms of our exchange rate, there's a lot of opinions on fair value for the Naira. But I think that most economists are hoping and expecting the Naira to stabilize and be more stable in terms of value in 2025 due to higher oil exports and the benefits from obviously domestic oil refining, reducing the pressure on the dollar and the need for fuel imports. However, a lot of those forecasts don't necessarily see the Naira strengthening. And I think most of the forecasts that I've read are between 1,000 and about 1,600, 700 in terms of what they feel is fair value for the Naira bearing in mind that we do need to shore up those exports, oil exports. We do need to see the benefits of domestic oil refining come through to the economy. And we do need to make sure that we control inflation to be able to see those benefits. Foreign direct investment. By the end of Q2 2024, investments had almost doubled compared to the previous year, and we're hoping that trend continues into 2025. Obviously, there needs to be policy around the business environment, security concerns, definitely could help attract more FDI. And the president recently, in a cabinet reshuffle, selected a new minister for trade, actually, who's super experienced, super smart, and should be heading up those negotiations and policy work to make sure that through 2025, we do see foreign direct investment increase. So what needs to be done? In terms of inflation, complementing that monetary policy and monetarist outlook with more structural policy, and we think that that's going to happen in 2025. Increasing agricultural productivity. One of the hardest hit sectors for people in Nigeria was the suffering due to high food prices, and enhancing policy that helps to enhance agricultural productivity is really key in terms of both combating inflation and really improving the standard of living and improving dignity for Nigerians. In terms of investment in technology, obviously enhancing VC and encouraging the government to actually buy from these tech companies as well. Remember, like Elon Musk is a massive government contractor. I can remember this big fight between Bill Gates and Jeff Bezos over the value of a government contract and whether it was going to go to Amazon or whether it was going to go to Microsoft. The government is typically a big buyer of tech services. Oracle is another big tech company in America, again, that has a huge sort of business and government services. So encouraging these collaborations between tech companies and the public sector really help to create local champions. In terms of business environment and infrastructure, really strengthening legal protections for investors. Investors need to feel safe to invest in the country, so improving the legal framework to protect investors' rights and enforce contracts fast, quickly and effectively would really be helpful. Although, like a lot of contracts, particularly in the oil and gas industry, are on the basis of English law anyway, with arbitration in London. So it's a factor, but not the biggest factor. Increasing infrastructure investment, and now with the removal of the subsidy, we'll have more fiscal space to be able to execute on that. If I was to say the biggest recommendation that I have for Nigeria right now in the short to medium term is to drill more oil. Wherever we need to get the money to invest in the oil sector, the government should support those entrepreneurs working in the sector to get it. We need to drill more offshore, we need to drill more onshore, we need to exploit more gas resources. Like I said, the global demand for oil is $100 million 100 million barrels per day. And Nigeria should just be contributing more than it's contributing. And there are two major factors why we can't do that. Number one, we're simply not drilling enough. Not enough money is going into the sector. Whether we need to go to Saudi Arabia, whether we need to go to Qatar, whether we need to go to Russia, whether we need to go anywhere, we need to get more money into that industry. We need to get more investment into this industry. We need to be drilling more. And number two, when we actually get the oil out of the ground, it needs to be secured. So whatever security company that we need to hire, whatever drones that we need to use, whatever, even if we need to bring in foreigners to secure our oil once it comes out of the ground, I'm all for it. I think that, super important for us to contribute more to those 100 million barrels of demand a day that we're currently contributing. And, I was going to ask a question. During COVID, how much do you think that the demand dropped? I said 100 barrels per day during normal times. So how much do you think it was during COVID? Remember, people weren't flying. Everybody was stuck at home. People weren't driving to work, they were working from home. It went down to just 80 million barrels per day. So there's a resilient demand for oil. And I also think that the amount of money that is going into the oil and gas sector is too small to sustain that 100 million barrels per day in the short to medium term. So this is somewhere where Nigeria can win. And we need to double down. there is an investment shortfall. In order to continue to maintain just the same level of oil that we're producing now, there needs to be an investment of 550 billion into the sector. So it's super important that we follow Donald Trump's advice and drill, baby, drill. Now, I do understand the sensitivities around climate. I do understand the sensitivities around the fact that until Elon Musk finds a way for us to conveniently sustain life on Mars, this planet is the only home we have. And fossil fuels are destroying it. And even in northern Nigeria, when we look at Lake Chad, which was sustaining entire communities, climate change has really changed their lives through the desertification, through the change in sort of water resources that we've seen in that area, through the Sahel, probably contributing to some insecurity in the Sahel as well. The desertification and climate change is almost directly responsible for some of the insecurity that we're seeing in the West African region. So for Nigeria's immediate future, I think that 90% of our forex comes from oil, and we need to drill. But we also need to be mindful of the effects that fossil fuels have on our planet. And we need to make a firm plan to really engage in innovation around the energy transition, using the money that we get from oil. Now, I could be swayed from my drill, baby, drill philosophy if there was a group of countries willing to replace our revenue. So I can confidently promise that if there was somewhere where we could get $100 billion a year, and Western countries that created the crisis in the first place were willing to somehow subsidize us so that we wouldn't have to drill, that would be the perfect solution. And we'd have $100 billion. I would say 70 billion of that should even go into NSIA, go into our sovereign wealth fund, and be used for global investments to help diversify our economy. 30%, we should split it between universal basic income and social support for our citizens. You see, I've already created the budget if we're to get that kind of money. But I really strongly doubt that's going to happen. So I think finding a balance between investing in the sector that brings our dollars, reducing the suffering and poverty that we have in the country right now, using that money to support the venture capital tech industry and using that money to support the energy transition, and finding a balance between all of those things is super important. I'm going to speak a bit about my day job. I run HealthCap Africa. It's a Pan-African investment fund. We make early-stage investments in health tech and fintech. It's the largest healthcare-focused fund right now in Africa. We invest in Nigeria, Kenya, Egypt, and South Africa, and opportunistically in Francophone Africa. Our portfolio companies already, even though we're still raising the fund, have received follow-on capital of nearly $100 million from a combination of domestic investors and international investors. And our portfolio companies create over 2,000 jobs across the continent with sort of 20 companies invested in, and they have operations across 12 countries. If you're a founder and you want to submit your pitch deck to us, remember you have to be early stage fintech or health tech. Our definition of fintech is wide, so it includes insurtech, it includes marketplaces, it includes embedded finance, and please send us your deck at pitchdecks@healthcap.co. And if you're an investor that wants to learn more about investing in Africa, then please contact us on investor relations at healthcap.co.
I'd like to talk about two policies that I think have been defining for 2024. One is the Naira-Yuan Swap agreement, and the other one is the bank recapitalization. So the Naira-Yuan Swap agreement is a financial agreement between Nigeria and China that allows for a direct currency exchange up to a value of $2 billion. And that reduces the need of dollar intermediation in bilateral trade. So the deal aims to streamline trade, reduce costs, and decrease reliance on the US dollar for transactions between two nations, Nigeria and China. And I also think that Ghana might be doing something similar for their currency as well. So they will have also a CDU swap agreement. Now, the second policy that I wanted to speak to was the bank recapitalization. And this has been in the news all year, where all of the major banks in Nigeria were asked to increase their capital to ensure financial stability and support economic growth, and also align with international banking standards like the Basel standards. And the policy was designed to make Nigerian banks more resilient, capable of lending to larger projects, and more competitive on a global scale. So I'll just sort of dive into the Naira-Yuan Swap first of all. So in terms of trade efficiency, the Naira-Yuan Swap agreement has allowed for sort of direct trade settlements between Nigeria and China. So previously, if we wanted to buy from China, then we would have to change Naira to dollars and then change the dollars to Yuan. And that's like super costly, right? And it puts pressure on the Naira. So to improve cost and to increase efficiency in transactions, and also maybe even to increase our bilateral trade, if Nigerian businesses really see this as an opportunity, then, that could be one of the advantages, so trade efficiency, cost savings. Also, there could be a currency stability argument. So the swap actually aims to reduce pressure on Nigeria's foreign dollar reserves. The implications could be mixed depending on how the Chinese economy performs. And if you want to learn more about sort of the issues with fiscal stability in the Chinese economy, then I would advise you to go back and watch my global economic outlook, where I talk about the Chinese economy in a bit more detail. So I guess the advantage I spoke about earlier is the trade efficiency and the cost savings. But this Naira-Yuan swap does leave us as Nigeria more vulnerable to the Chinese economy. And that's something that we definitely have to watch. There's also the potential of a trade imbalance. Right now, we buy from China a lot more than China buys from us. And having this policy in place and building closer trade relations with China actually might allow Nigerian entrepreneurs to see the potential of selling into China, particularly in the mining sector, for instance, where, China is a big buyer of minerals. But we need to be able to get the foreign direct investment from China to make these investments in the sectors that China is interested in. There could be a role for crude exports, a role for LNG exports, etc. But we have to be able to monetize it. Otherwise, we run the risk of having a trade imbalance. So that's really what I had to say on the Naira-Yuan currency swap. There's advantages and disadvantages, but I think that Nigerian entrepreneurs can use it to their advantage. The last thing that might be an issue with this agreement is geopolitical. I would prefer that Nigeria remains open in its relationships and doesn't define a relationship with an exclusive partner. I wouldn't advise this for your personal lives, but I would advise it for Nigeria, where we maintain an open relationship with Europe, a great relationship with China, an open relationship with the US, and we don't pick a side, so that we can see whenever we have a negotiation who is offering us the best deal. This Naira-Yuan swap, if not managed carefully and diplomatically, could look like Nigeria is picking a side. So I really do hope that our Ministry of Interior and sort of our diplomatic representatives in America can really sort of, and I think that that's why it's capped at $2 billion, can really assure our friends in the United States that this doesn't affect our relationship with them. So we sound like, in a sort of romantic context, I don't advise you to take this approach, but definitely in a diplomatic and trade context, I think that it's really important that we keep our options open and make sure that it's more like a situationship than an exclusive relationship. So in terms of the bank capitalization or the bank recapitalization, we needed to do that. The Naira devalued to the point that if you look at our liquidity ratios or what they were before this recapitalization was announced and you changed that money into dollars, we were falling below the recommended minimums by international standards. And weak banks mean a weak economy. And we've seen it happen in Iceland, we've seen it happen in Cyprus, that if the banking sector begins to have issues, then it can take down the whole economy. Because we get into what's called the doom loop in economics, where the one bank fails and then that contagion spreads to a lot of banks and people start withdrawing their money, and then the federal government has to come in and try and bail out the banks. And if the federal government can go really broke really fast trying to bail out banks, and that becomes a doom loop where a single bank failure can actually cause the government to go into debt trying to bail out banks and results in a much wider economic crisis. So how a banking crisis can turn into a wider macroeconomic crisis. And I think that that's what the CBN was trying to avoid by making sure that we have a much more robust capital stack in our banking system. So I think that that's a sort of main advantage. And if you want to learn more about the Basel regulations or the Basel International Guidance on Banking, if you want to learn more about why banks need a lot of cash, then I will link my bank and bank regulation lecture series. It's a 4-part series. The first lecture is about 20 minutes. I think everything together is about an hour or two, to really give you a much deeper understanding of minimum capital requirements and why they exist. Some secondary advantages of this is, of course, the increased lending ability of the bank to lend to perhaps large infrastructure projects, perhaps participate more in trade finance. If you think about deals like Etisalat, for example, where several banks have to syndicate a relatively small amount of money in international terms, you think about why don't they have more money in the first place, and why don't they become bigger and more competitive? In the short term, I don't think that they're going to lend that money for various reasons to do with even sort of the cash reserve ratios and the economy right now in terms of the level of inflation. But I think in the long term or in the medium term, it could lead to increased lending. Market confidence is a big argument, right? People don't want to invest, especially foreign investors. They get nervous about investing in countries with weak, undercapitalized banks. Recapitalized banks will attract more foreign and domestic investment into Nigeria, enhancing the financial market's depth and liquidity. And that could actually lead to a more vibrant capital market as well. The problem is the smaller banks may have to change their licenses or downgrade their licenses because they simply can't reach the capital requirements. And that makes the banks that are too big to fail even bigger, and the smaller banks just it becomes very difficult for them to compete. So in a way, the banking system in Nigeria has historically been an oligopoly, but after this recapitalization, I think even more so. So I've spoken about two major policies I wanted to touch on: the Naira-Yuan Swap and its advantages and potential disadvantages, and also the bank recapitalization exercise and what that means for the overall financial stability, for macroeconomic stability, for competitiveness, for lending into the economy, and for economic growth.
In conclusion, Nigeria's economy is undergoing significant transformation. Key reforms include the removal of fuel subsidies, tax reforms, are enhancing fiscal stability and attracting foreign investment. I've been traveling around America, telling the African story, telling the Nigerian story, to people. And I get asked, that what about corruption? What about poor governance? What are you going to do about that? We can't invest until you fix governance. And especially to the Americans, I say, but that didn't happen in your country. So why do you expect it to happen in ours? When I was growing up, I grew up in foster care, so I grew up with a white mom. And whenever I do anything wrong, she'd be the first person to tell me that that's American influence. I can remember when women started wearing, or people started wearing jeans with holes in them. Oh, they were like, oh, that's so American. Like, we'd never do that in Britain. Britain was actually seen as a prim and proper place. And America was still, as I was growing up, seen as a wild place. So imagine how America looked to the European investors that were investing 150 years ago. People were shooting each other. There was, very, very poor security, very, very low governance. But European investors still doubled down to invest because it was a dynamic economy and they could see the potential. And that investment bought institutions. That investment held politicians accountable. That investment reduced corruption. People like JP Morgan became so wealthy that when the government of America was having economic problems, I can remember like Roosevelt, I read that Theodore Roosevelt swore that he would not talk to JP Morgan. They had such a cantankerous relationship. But at the time that America started having economic problems, he still had to tell his government to reach out to him. So what I'm saying is wealthy entrepreneurs with big companies improve governance. And in my book, Banking, Finance and Economics in Emerging Markets, I point out that as GDP, there's studies that show that as GDP per capita increases, corruption actually reduces because there are more people to hold governments accountable. So it's really, really important for foreign direct investment to be viewed as an instrument or part of the toolbox that actually improves governance, not the other way around. So I've spoken about the technology sector. I've spoken about the oil and gas sector. I've spoken about the reforms that are being implemented. I've recommended reforms that can be implemented. And as somebody with British roots living in Nigeria, I'm betting my career on Nigeria and Africa due to my belief in its future. Despite the economic challenges, looking at, the number of fantastic people. I mean, I've spoken a lot about oil in this presentation, but Nigeria's greatest resource is those 200 million people. I grew up in Britain, and without any sort of prejudice to Britain, I would say that that's not the most entrepreneurial environment. But I started traveling to America this year, and it's the only place where I see something like I've witnessed in Nigeria in terms of that entrepreneurial drive. And I actually think that Nigeria is a lot more similar to the US than it is to Britain in terms of it having really driven entrepreneurial risk takers and a growing population. I follow Elon Musk on X, on Twitter, and he's always talking about the dangers of the population collapse in Europe and America, and how that's usually, population collapse usually precedes the collapse of an empire. And, one of the factors that preceded the collapse of the Roman Empire was a population collapse. Whereas Africa is the fastest growing population in the world right now. It's the youngest population in the world right now. It has the fastest growing internet access in the world right now. It has some of the fastest growing urbanization rates in the world right now. It has the fastest growing mobile penetration in the world right now. 70% of mobile money transactions happen in Africa, meaning that I can extrapolate, by some measures, it's one of the most innovative financial services and fintech markets in the world right now. So despite the current economic challenges, the signs point to Nigeria and Africa having significant growth potential, because economic growth doesn't always follow population growth, but historically, it usually does, making it a fantastic place to invest. I look forward to 2025 and wish you a really, really great new year.